What if we could find a way out of the game? Then we could break even. Then you could win. Satoshi found a way. He gave it away. And he went away. And that's Bitcoin. Bitcoin is digital capital. That's what he created.
At the Bitcoin conference in Nashville, Michael Saylor delivered a stellar keynote speech about Bitcoin. He presented Bitcoin as the ultimate digital asset, with the potential to preserve wealth for 100,000 years, surpassing traditional assets such as real estate, land, paintings, gold, and silver. Saylor emphasized that digital assets represent the future of money and will seamlessly integrate with AI, marking the next major disruptive force in human history. He forecasted that Bitcoin would reach $13 million by 2045, drawing parallels to historical transactions that yielded substantial returns. Examples included the Dutch purchase of Manhattan in the 17th century, now worth trillions, the Louisiana Purchase from France in 1803, and the acquisition of Alaska from Russia in 1867. These landmark deals underscore the long-term value and transformative impact of strategic investments, akin to what Saylor predicts for Bitcoin. As we bring you more clips from the interview, please take a moment to like the video and subscribe to the channel to help us reach more viewers. Don't forget to turn on post notifications to stay updated with our latest content. Share your thoughts and observations in the comments section below. Thank you and enjoy the video.
Bitcoin's immortal, immutable, and immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being attacked by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets. And it is the solution to our economic dilemma. The transformation of our capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take your Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. By the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move the Bitcoin every year or every decade, and you can stay one step ahead of the custodians failing. You can't teleport a building. You can't teleport the King Ranch. And so Bitcoin is that thing that you can move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good hardware wallets and signing devices and spend a day a year to keep track of it. Now you've got a 10,000-year asset. And what happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. If they have a choice between owning the Bitcoin and owning the ranch in Texas or owning the bar of gold or owning the Argentine peso, it's pretty obvious what they're going to want, and you can see here why they're going to want it. Digital assets are in a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of 1,000 to 100,000 years. It's a breakthrough in capital preservation, but it makes it a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile for something resilient. Trade something local for something global. Trade something physical for something digital. Trade the security for the commodity. Trade the commodity for the scarcity. You can't go wrong moving in that direction. So let's talk about some great trades in history, some trillion-dollar trades. The Dutch understood naval power. They understood ships. They had thousands of them. They bought the best port in the New World for a couple of $100 in plastic and textile trinkets. And that's worth $2.5 trillion today.
The Dutch established several significant ports in the New World during the 17th century as part of their colonial ambitions. One of the most notable acquisitions was the purchase of the island of Manhattan, where they founded New Amsterdam. In 1626, Peter Minuit, the Director General of the Dutch West India Company, famously purchased the island of Manhattan from the indigenous Lenape people. The transaction was reported to have been for goods valued at 60 guilders, often mythically cited as being worth around $24 in trinkets and tools. New Amsterdam, situated at the southern tip of Manhattan, became the capital of the Dutch colony of New Netherland. It served as a vital trading post due to its strategic location at the mouth of the Hudson River, facilitating the flow of goods and resources between Europe and the Americas. The Dutch control of New Amsterdam lasted until 1664, when the British seized the territory. The English renamed the settlement New York in honor of the Duke of York, who later became King James II of England. This acquisition marked a significant shift in colonial power in North America and laid the foundation for New York City as a major global port and financial center.
Okay, it was an investment that's returned 6% for 398 years straight. It's a 10.5 billion X return. And if you think about it, you're like, why would I actually give up the best port in America for a bunch of textiles and plastic and glass? But the people that sold the thing to them didn't understand naval power. If you don't appreciate the reason you're going to want the property, you won't value the property. Napoleon wanted to gallivant across the old world, and Jefferson wanted to expand in the new world. So France sells Louisiana to the U.S. for $15 million in 1803.
The Louisiana Purchase of 1803 was a pivotal transaction in which the United States bought approximately 828,000 square miles of territory from France for $15 million. President Thomas Jefferson sought to secure New Orleans and ensure American access to the Mississippi River, but Napoleon Bonaparte, needing funds for his European wars and losing interest in North America after the Haitian Revolution, offered to sell the entire territory. The deal, finalized on April 30th, 1803, doubled the size of the U.S. and cost about 3 cents per acre. It provided vast resources and land, prompting the Lewis and Clark expedition to explore the new territory. This acquisition secured crucial trade routes, fueled economic growth, and set a precedent for future expansion, despite raising constitutional questions about the president's authority to purchase land. The Louisiana Purchase remains one of the largest and most important land deals in history, shaping the future of the United States and its development as a continental power.
The $15 million probably lasted a few months fueling the French army. It's gone. Jefferson got that. He got 27% of the United States. It's an 800,000x return, worth 12 trillion or more. It'll be worth more. Jefferson had some vision, as did this man. Seward pays $7 million for Alaska 2 years after the country's decimated by the Civil War.
The Alaska Purchase of 1867 was a significant acquisition by the United States from Russia. Seeking to offload the unprofitable and vulnerable territory, Russia negotiated with U.S. Secretary of State William H. Seward. On March 30th, 1867, the U.S. agreed to purchase Alaska for $7.2 million, about 2 cents per acre. Initially ridiculed as Seward's folly, the purchase added approximately 586,412 square miles to the U.S. over time. Alaska's rich natural resources, including gold and oil, and its strategic value, proved the deal's worth. This acquisition furthered U.S. territorial expansion and enhanced its geopolitical influence in the Pacific, demonstrating the long-term benefits of the purchase. Michael Saylor tries to explain the time value of investment and exactly linking it to where Bitcoin is headed with its 21 years forecast of 2045.
John D. Rockefeller was trying to start an oil company. Today, there's $1 trillion of oil underneath Alaska. It's a massive return for a piece of paper. Take the $450 trillion, multiply by 3%. That's your entropy cost or your inflation cost. It costs the world $13.5 billion a year to take all of those parade of horribles when they're trying to preserve their wealth. If you put a 20 P to E on it, like you'd value a company or a long-duration bond, that's worth $270 trillion. So digital capital is worth 10, 20, 15 trillion a year, and it's worth hundreds of trillions of dollars. Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bond. It's minus 5%. Imagine capitalizing your company or your country on a minus 5% instead of a plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to the year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in the year 2045. 13 million. It could be a 3 million bear case. It could be a 49 million bull case. But what is Bitcoin? 7% of the world's assets then. Well, I actually think that AIs and technology are going to revolutionize tech. We had no companies worth $1 trillion. Then we had a bunch of $1 trillion companies. You're going to see more because you're going to see companies with 100,000 AIs and no employees, and they're going to do the work of companies that used to have 100,000 employees. You're going to see mega corps develop, shipping robots and self-driving cars, and a company that gives a personal physician to 1 billion people without any doctors on the payroll. So clearly, equity is going to grow fast. Gold's going to get demonetized. Land will be less monetized. But look, here's the future in 2045. Doesn't look that revolutionary. It looks like today. It's just that Bitcoin is visible on the chart to you. When Bitcoin is visible, that's going to be the base case. Now, what are the implications of this? How do you make money? Well, let's talk about individual Bitcoin strategy. What should you do? Make Bitcoin your primary treasury asset. Convert your excess earnings to Bitcoin. Utilize subsidized credit. If the government will loan you money, borrow the money at cheap rates and buy Bitcoin, and find a tax-efficient way to invest the Bitcoin.
That's our video for today, featuring Michael Saylor's keynote speech at the 2024 Bitcoin Conference. We hope you found it valuable. Give your comment and observations in the comment section below. Subscribe to the channel and give this video a thumbs up. Thanks for watching.